Hello and welcome back to the Real Estate Junkies. I'm Nick Zigic, broker owner of a real estate brokerage here in Monrovia, and we're talking about something very interesting. Insurance policies, homeowner insurance policies. And to break it all down, today with me in the studio, my friend and agent owner of the insurance company, MarkEWu.
How you doing,
Nick? How you doing?
I'm doing great.
Thank you for coming back and talking about insurance.
Glad to be back, Nick.
Now, this is Insurance 101, homeowner insurance policy. What is it made of? How do we make it happen? Why don't you tell us about the parts of the insurance policy?
Well, a lot of clients just come and think homeowners policies are all alike, and they really are not.
They're not all alike.
They are not alike.
All right.
Definitely not all alike. So it really depends on the type of a policy that you get, and it's important for a customer or a consumer to realize that they're not the same.
Well, what are the differences?
Well, for instance, most of the HO3 policy is a type of policy that is most common in the industry, and it covers perils such as fire, wind, hail, smoke, explosion, falling objects, such not, including liability. And it covers perils unless it's specifically excluded. You could go to the other extreme that is afforded in California called the California Fair Plan, and that policy is a policy where theft is not covered, water damage is not covered, and the most important thing, liability is not covered. So even though a person might say they have a homeowner policy, they're markedly different.
Okay, I'm just a regular guy buying a house for the first time homeowner. I need to get a homeowner policy and contact the insurance company, name yourself or anybody else. And where do I start, or what do I need to get? How do I know what to get?
Well, first of all, hopefully you're choosing an agent that has expertise in the area, and they're well educated, and they are able to explain coverages in terms that you are able to understand.
Okay. Make
sure, first of all, that they have an insurance license, because in California, if you're talking about coverage, you better be licensed. Then they better be ensure that they have E&O insurance, errors and omissions, because essentially, if your agent tells you it's covered, even though the policy jacket says it's not, it's covered. So ensure that your agent or whoever the agency is has a E&O policy. And I often ask a client to ask the agent, how many E&O claims have you placed in the last 5 years, 10 years, and whatnot? Because that shows that if they have numerous claims, they're making a lot of mistakes in that agency.
That makes sense. Now, on this other hand, the person getting the insurance policy needs to be qualified as well.
Well,
or can anybody get it?
Anybody can get it, but there are qualifications on the home to get it. For instance, if the house is not in good shape, meaning that it's falling apart, or the roof is deteriorated, or there's paint peeling, or there's a junk pile in the front yard and it looks like debris all over the place, or if there's raised foundations, a sidewalk, and high-risk slip hazards, they're most likely not going to be able to find insurance. There are other factors, such as some companies do not want clients that have knob and tube wiring, or if their house is not bolted,
right,
and if they're a historical home. So there are many things that can disqualify, including types of dogs you own. If you own a Rottweiler, a Pit Bull, a Akita, those type of dogs, many companies do not want to insure you as a homeowner.
Wow, that's interesting. I've never thought of that. So when you're thinking about the house and whether it's qualified or not, is there any qualification for the person that's pulling the insurance policy as well, as individual?
No, there isn't, other than that he needs to be the owner of the house. So whoever's coming to an agent for insurance has to make sure that they are the owner of the house, and therefore they can get the insurance based on that, providing they qualify from the standpoint that they don't have a lot of claims following them.
Okay. So do you send out somebody to check out the house?
Every company will send out an inspector, a third-party vendors oftentimes, to check out the house to make sure that the risks of the home adheres to the underwriting guidelines of each insurance company. So that could sometimes be done prior, or that can sometimes be done after the policy is written. Some companies do also interior inspections. Other companies do a very simple inspection. In fact, they just drive by the house. If the house looks like it's well maintained, they move on. If they spot a condition, then they'll stop and they'll get out and they'll look at it, and that determines the underwriting guidelines.
You've been around for 35 years.
I've actually been around for 25,
25,
but I've
okay.
been in San Gabriel or Southern California for over 50 years, Nick.
All right. I didn't want to know that much, but the fact is that with that experience, you have seen different scenarios and so on. So you have insurance policies on the dwelling, different types of insurance policies.
Yes. For instance, let me give you one main factor that I try to educate my client policyholders on. When they get a policy, again, oftentimes they're thinking that the policy is the same. So let's say Company A, you have $300,000 on the dwelling coverage to rebuild your house. Company B, you also have that same $300,000 dwelling, but it's a couple $100 cheaper. And what happens is a fire comes and it destroys the house, and now it costs $400,000 to rebuild. Well, what they might fail to realize is that the Company A, which they're paying a few $100s more on, has extended limits, meaning that they go above the policy limits. And oftentimes, for instance, the company I represent goes 50% above the policy limits. So in that event, even though your insured was covering their home for $300,000,
right,
we would pay upwards of $450,000, exceeding the policy limits. Where Company B is a stated limit policy, means that all they get is $300,000. And so if they had a loss of $400,000, they would be short $100,000. And wouldn't you say that's worth $200 more a year?
Could you find that out in the policy itself?
Absolutely.
Okay.
It has to be disclosed. In fact, it's mandated by the Department of Insurance that an insurance company disclose that to all policyholders.
So when getting the insurance policy, of course, you want to be covered for a lot of things, and I'm sure that a lot of people think that they are covered for some things and might not know that they are not and stuff like that. But when you break it down, most of the stuff that I see these days and so on is like, for example, theft or damage to personal property and stuff like that. And then you have that aspect of what to do if you need to move out, if the house burns down, and what's covered in there. But let's talk about the personal stuff.
Well, okay, let's talk about theft. You brought up an issue
Yeah.
of theft. For instance, as I told you, not all policies are alike. When it comes to contents, whether you have replacement costs built into your policy as an endorsement or whether you just have an actual cash value. Let's say that you had a TV set, it's a big screen, you paid $2,000 for it 5 years ago. If you didn't have a replacement cost policy, what the insurance company would do would depreciate for that and give you a percentage of what that TV set is worth.
Okay.
Whereas if you had the replacement cost endorsement on your policy, you'd actually get a brand new
market value.
TV. Yep, you get actually a brand new TV, not a market value, because market value puts a depreciation in, but
Okay.
but replacement costs, whatever is the cost of that same TV set in today's market, you would get back.
You mentioned two things that I wasn't aware of. It's that replacement value,
That's correct. Replacement
the
actual cash value.
cash value. So those two things, when do we decide for those?
You should be having that conversation at the beginning of your assessment with your insurance agent.
So I didn't even know that it exists, right?
Well, your agent should be taking you through to explain to you how your contents are covered and what are covered, what are not, at what value they are covered. So
In your personal experience, which choice is better?
in my personal experience, replacement cost is always better because you don't want to have a depreciated cost factored into when you have a loss. For instance, let's just say you had a fire and all your furniture, your stereo, your appliances, your clothing, everything went up in smoke. Wouldn't you want new items and not a percentage of those items to rebuild?
No, it makes sense. So versus cost, it would definitely make sense.
It's very minuscule. The cost difference on replacement costs on contents may be close to $100 a year annually, less than $10 a month.
I got to rush home and read my policy to see where I am with my stuff.
Yes.
So anything else that you would want to add into the structure of a normal insurance policy?
Yes, liability is a real main factor,
right.
key thing, because as I alluded to in a previous segment of your show, liability claims can blow out of proportion, and so what can be small can be tens of thousands, if not hundreds of thousands. So you got to ensure that your policy does have liability and contains liability in it. Again, I alluded to the fact that the California Fair Plan is a policy that the state provides for those clients that aren't able to get insurance, and it's insurance of last resort, but that doesn't include liability in it. So when it comes to liability covers things like a dog bite, or if you play golf.
And those happen pretty frequently,
They
right?
do happen
Yeah.
from time to time, and dog bites are an issue in our industry. But it can also cover you for things like, hey, you and your kid are playing baseball and unfortunately you accidentally whack somebody. Well, liability would afford coverage there. Or if you're on a plane and you happen to drop your suitcase on somebody's head accidentally, liability covers there. So it doesn't just have to happen on your premises,
Is that right?
but it's family and guest liability. Whereas also there's something else called medical insurance, and that is like when you're throwing a party. I know you're a party animal, Nick, and if somebody comes and gets accidentally hurts, they're fooling around, they're dancing, they're twirling, and they happen to fall on no negligence on your
Right.
part, but their own, and an ambulance come out, you can have your policy, if you have guest medical, pick up that tab.
So I got to add, what's it called?
You don't even have to add it. Many of the
gotta read my
policies
policy
of the
first,
HO3
right?
policy, the special form policies, have that contained in the policy. That's part of your liability.
I got to check that. Okay, what's the common level of liability insurance should carry?
Well, what comes with many policies that have liability is $100,000, but we oftentimes suggest that the client cover more, $500,000 to $1 million. Again, the dollar amount for between $1 million policy and $100,000 policy is less than $10 a month more in increase. But as you know, we are in a very sue-happy state, and people like to sue if they get
Yeah.
injured on your property.
Yeah.
And so I
Well,
would recommend that higher limits.
I love that. I'm going to have to check those too. And this was a good experience, educational experience for me, and I hope for you. And the last one I wanted to touch with is tree falling on a house.
Well, good. That is also, as you know, last year,
Yep.
we saw in this area many trees that came down on people's houses. And that is something that is a covered peril. That's called falling objects. So when a tree falls on top of your house, it creates a couple things. First of all, if it comes to your house is going to be needed to be rebuilt. Where's the homeowner going to be put up while the house is being rebuilt? Oftentimes it takes anywhere from 6 months to 12 months to rebuild a house. Oftentimes the policy will also extend and afford coverage to that on a normal special form homeowner policy. So we will put the person up to 12 months in the event that that tree makes the house uninhabitable.
Very good. Well, I think we covered it all.
Good.
Did we?
We did. Well, not all. There's a lot to insurance, but we did the best we can
on
in the
these,
segment that we have.
Cool topics, and I definitely will check my policy and make sure that it is tailored to what I need, and I hope everybody listening will. Mark, thank you so much.
Again, it's
been
a delight
pleasure.
to be here again, educating your audience.
Yeah. All right. So you heard all these good stuff about insurance policies right here on the Real Estate Junkies. Don't forget that. So come back and see us next time. I'm Nick Zigic. Come back and watch us on the Real Estate Junkies.